Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Sebastian Kanovich. He's the CEO of dLocal. We're going to take a look at cross-border payments in emerging markets, such a hot topic in the world of fintech. Sebastian, welcome to the market site. And again, talking about those market opportunities for global companies looking to tap into emerging markets. It's certainly there now.
It's huge. Actually, we've seen a huge trend, and we've seen this evolving. It wasn't the same case 6 years ago or when we started. So we see that India, Brazil, Indonesia, Mexico are becoming more and more relevant for these international merchants, mostly given the fact that their growth has slowed down a little bit on US and in China, and they're looking at the next markets to where to find those growth pockets, and we're lucky enough to leverage that wave and that growth.
Do you think the US-China trade deal issues is part of that?
It's definitely affecting, for sure. So it's clear now that Chinese companies won't be very successful in the US. It tends to be clear that US companies will have a hard time in China. So they're looking more and more into expanding into India, into Brazil, and we see them competing more and more in those markets.
Why are payments, why is it one of the most challenging obstacles when you're looking to overcome expanding into other countries?
So payments is completely fragmented, so there's no such thing as one payment stop and you'll get access to all these markets. So regulation works differently. There are different payment methods in each market. The FX rates are more complex. So you really need to be local in order to do payments. Visa and MasterCard just won't make it in every single market. So if you really want to have a local presence, you need to go one by one. And that's what makes it more challenging. And that's where we come in. That friction is where we exist.
Okay, and that's my question to you. Why not have a unified currency? Do you think cryptocurrency, maybe not now, but down the line, have a unified currency?
Eventually it might happen. The day that people are ready to hold those currencies, not just trade them, I think potentially there's a huge chance for that and a huge opportunity coming there. But as long as people just want to use the cryptocurrencies to exchange them and then go back to their pesos or dollars, we still see a lot of friction because you still need to go through all these local payment methods. So long term, it might be. We would be excited to see that. In the meantime, there's a lot of friction that still needs to be solved.
I would imagine it'd be really challenging to get that past all of the global central banks, having them work in concert with each other and accept the fact that there's one global currency. I mean, that would turn finance upside down.
Look, we would love to see it happening.
Yeah.
But realistically, we don't think we are anywhere near there. When you speak about crypto to one of the central banks, typically they freak out. That's the first reaction. So our approach has been to work with central banks, not against them, and really explain what we do, really explain why is it relevant for Facebook or for Amazon to collect payments in India or in Brazil, and why those users need to gain access. So it's not a fight with them. It's quite the opposite. It's cooperation. It's making sure that, again, we are globalizing as much as possible these international trends.
So who would some of your clients be at dLocal?
Facebook, Uber, Didi, Amazon, Netflix. We are helping those companies pay and get paid across 15 emerging markets.
All right, so interesting. Thanks so much for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.